Brought to you by CGTN Europe.
Hello, I'm Stephen Cole. Welcome to the Agenda podcast. This week we're asking whether digital and cryptocurrencies are the global future of money, or an all too volatile and misunderstood investment destined to lose the world billions of dollars. I spoke to Laith Khalaf, financial advisor at stockbrokers AJ Bell, to get his explanation of exactly what a cryptocurrency is and whether or not it's something we should be embracing.
There are a number of cryptocurrencies on the market. I mean, the basic premises of what we're talking about is a digital currency created by blockchain technology. So, the most famous one, of course, is Bitcoin, which is mined. Computers solve puzzles, and by doing so, they earn Bitcoins, which have risen to very high prices. They seem to be reaching record high prices almost every week at the moment. So I think yes, there is cause to be wary of these assets for private investors. I think probably a lot of people are looking at the huge price gains that we've seen in some of these cryptocurrencies, and they're thinking that this market is only going in one direction. Well, it might continue to rise, but we have to acknowledge that there's a very big downside risk as well. And we have seen in the past very big price falls.
Exactly. Just how cautious should we be? Because you talked about massive rises, but there's always that big element of risk, especially when you don't fully understand what's going on. So is Bitcoin a risky venture?
It is, yeah. You just need to look at the price volatility to tell that. I'll quote Warren Buffett here: "Don't invest in something that you don't understand." That's kind of one of the basic tenets of investing. I'd also point to what the financial regulator in the UK said, which is don't invest any money in cryptocurrency that you're not prepared to lose. And that's really the bottom line, is that you might actually do very well for it. The kind of future course of these cryptocurrencies is very unpredictable, which is acknowledged by even fairly bullish investors like Tesla.
Cryptocurrency, blockchains should be completely safe, shouldn't they? But many people don't seem to trust the cryptocurrency world. Why is that?
Well, I think there's probably a number of reasons. One we've touched on is that they don't perhaps fully understand it. And if you don't understand something, then it's natural to be slightly, kind of skeptical about it. Obviously, there kind of have been, issues with kind of, Bitcoin being so anonymous, linked to, issues in terms of money laundering and obviously criminal activity. So that's one reason. But, on the flip side of that, at the same time, we've got central banks, manipulating, traditional currencies. And so there is, one kind of anti-establishment point of view, which is that actually Bitcoin and other cryptocurrencies are not subject to those manipulations. So, in some ways, they've got more integrity.
Elon Musk of Tesla has invested $1.5 billion in Bitcoin. I mean, he must know what he's doing, doesn't he?
Well, he's got a great track record, but, I think it's fair to say that, he's able to kind of lose a penny or two if it comes to that. Whereas, for a lot of people, that's not the case. And yes, Tesla have invested some portion of their cash pile into Bitcoin. But, if you read the nitty gritty of their regulatory statement, even they are pointing to some of the risks involved in cryptocurrency. The fact that it might not ultimately be taken up by investors as a source, as a means of exchange by institutions. The fact that there are risks to the technology in terms of hacking, in terms of obsolescence, and also that we don't know yet what entirely the regulatory framework of cryptocurrency is going to be going forward. Regulators might start to take a sterner look at this area. So there are lots of risks around, and even some a company that's clearly as positive as Tesla is on the future of the cryptocurrency is pointing out those risks.
Is it winning acceptability elsewhere too? Because MasterCard and Mellon, they're now getting interested, aren't they?
I guess the thing that I always come back to is realistically, given how volatile something like Bitcoin is, how can it be used in the real economy? I mean, if you could just consider a situation where someone, if your employer offered to pay you a Bitcoin a year, well, at the moment you'd be earning $50,000 or so a year. What are you going to be earning next year? Well, we don't know. It could be $100,000. You could be doing really well, or you could be earning $10,000. Is that a risk that you'd be willing to take? Well, I'm pretty sure most people would say no, it's not. And so just kind of actually, there's a question of how much of this is, yes, the payments are superficially being made in Bitcoin, but then being translated into other currencies, and how much is this actually part of the real economy? And I think it's still quite a long way off being part of the real economy and being used, as I say, as a medium of exchange. And I'd probably also highlight just one other kind of, emerging risk, which I think is perhaps not fully appreciated as yet. Some interesting research that we've had very recently from Cambridge University showing that the amount of electricity that is used, the amount of electricity used by Bitcoin mining is equivalent to the same amount used by Argentina. And in a world which is increasingly concerned about the environment and ESG principles, you do have to question whether at some point investors are going to start thinking, well, hang on a minute, does this actually, can conform with our own kind of ethical objectives? So, another risk there to consider as well.
China, of course, is pushing ahead with its digital currency, although it's one, unlike other cryptocurrencies, that you can actually pay for things with. Is that a more likely future for these kind of currencies?
Well, potentially, yeah. And China's not the only central bank that kind of is looking at this area. But I guess we again just have to go back to the kind of function of what people use money for and how they use money. And it is kind of buy goods as a medium of exchange. You get paid to pay your bills. And the reality is that money is pretty digital already. The money that you hold in your bank account, you look at it online on your mobile app, you transfer it using your mobile app. So you have to consider what additional, flexibility something like a digital currency, kind of a cryptocurrency gives over and above. And increasingly, because money itself has become so digitalized, that margin is getting kind of ever thinner. So we already live in a very digitalized monetary world.
Laith Khalaf, a financial analyst at stockbrokers AJ Bell. Many thanks for joining us on The Agenda.
Pleasure.
So, as we've heard, China is ahead of the game when it comes to creating a national, entirely digital blockchain-based currency. But how exactly does it work? And what does it all mean for the global economy? Well, here to explain more is Zhou Yong, Assistant General Manager at Qinhuang Bank in Chengdu in Sichuan Province. Zhou, how does China's digital currency actually work?
From a very general point of view, actually the system, you can see the system is a two-tier system. Tier one actually is a central bank, which is called the People's Bank of China, PBOC. So PBOC actually centrally manage the whole system. The system actually issues the currency, doing all the daily operations. But PBOC does not face the end user directly. So PBOC will only issue the digital currency to the commercial banks. Then the commercial banks will issue the digital currency to the end users through a digital wallet. So that's why it's called a two-tier system. So PBOC will face the commercial banks only. Then the commercial banks will face the end users through a digital wallet. But the system is centrally managed.
Do you hope that this will set a standard for global digital currencies going forward?
I personally, I hope so. But I think the question is actually we have to answer a few questions when we are talking about the global standard, because every market is different. Every the law is different, the technology is different, the market situation is different. Actually, for every country, I think there are three basic questions you have to answer when you are going to the digital currency. First is that, is this currency going to be a legal currency, or it's a commercial entity-based currency? That means it's something like Libra. This is number one. Number two is that, is this digital currency positioned to replace the retail market or the wholesale market. That's number two. Number three is that is it going to be DLT based? It's not a must. I think for each country, for every country, these three questions are different. I think the answer is different, and also the solution will be different.
What about commercial interests in China? How have they reacted to this?
From the bank's point of view, we can take advantage of this opportunity to get into the retail payment sector. The second is from the digital payment point of view, for example, Alipay or WeChat Pay. I think the digital currency may have some effect on them because I think in the future, Alipay, WeChat Pay, or UnionPay, and also the digital wallet will be standard side by side and compete with each other.
So essentially, if you boil it all down, what is the one big advantage of a digital currency over the current real currency in China?
First is if you compare the digital currency to the paper currency, there are a lot of advantages. It's faster, it's cheaper, and it's transparent, and it's more fit to the digital ecosystem. But if you compare this digital currency to the current digital payment ecosystem, it's slightly more complex, because the so-called the digital payment actually they are account based. That means their money actually is not M0, it's M1 and M2. M1 and M2 actually are not backed by the government. It's not legal currency. It's backed by the commercial entities, but the commercial entities are not as so good as a central bank. So if we compare the digital currency to M1 and M2, it's slightly more complex. But we're not going to replace the digital payment like Alipay or WeChat Pay with digital currency, because it's already world class and it's working quite well. Okay. And we have to protect our investment.
And lastly, I mean, how does this benefit shoppers? How does this benefit the ordinary man and woman on the street? What do they get out of this?
I think one of the key advantages of digital currency is that you can make a payment even if there is no internet. That means you can directly make payment from one phone to another phone. That's one. Another one is secondly is even if you do not have a deposit account, you can still open a digital wallet as long as you have a phone or you have your ID card. I think from the inclusive finance point of view, digital currency has a lot of advantages. But going forward, because it will be market driven, so which one will be better, we don't know.
Zhou Yong, Assistant General Manager at Qinwang Bank in Chengdu in Sichuan Province. Thanks for joining us here on The Agenda. As we've heard, cryptocurrencies are a relatively new invention and one many people don't really understand. So what does the future hold for them? Are these new digital currencies in need of tighter regulation? And what impact has the changing financial world in the midst of the pandemic had on their adoption? Here with me now to delve into those and answer many other questions are Dr. Iwa Salami, Senior Lecturer in Financial Law and Regulation at the University of East London, and Gavin Brown. And Gavin is Associate Professor in Financial Technology at the University of Liverpool. Dr. Salami, let's start with you. You've said the current pandemic has helped Bitcoin leap into the mainstream. How so?
So the pandemic has had a negative impact on various asset classes, not least stocks and bonds. As a result of this, of course, investors have looked for alternative sources of investments to asset classes that haven't been as exposed to the pandemic as stocks and bonds, and therefore have resorted to sort of crypto assets. And we've seen both retail and institutional investors being quite interested in this space. We've seen the likes of institutional investors that were slightly skeptical about the space sort of investing in it, such as, for example, Rufa investment companies. We've seen BlackRock, the private equity firm. We've seen other financial institutions, particularly those involved in the payment space, such as PayPal and Square, making huge investments, and particularly in Bitcoin. So yes, these adoptions by mainstream institutional investors as well as financial institutions involved in the payment space has, if you like, thrust Bitcoin into the mainstream.
Okay, and Gavin, would you agree that Bitcoin is heading towards the mainstream because of the pandemic?
I guess to some extent it depends on how we define mainstream, but it's certainly becoming more prevalent and is sort of raising more awareness across a bigger proportion of the population. I think another key thing to think about is central bank policy and monetary policy here. So what we've seen in this kind of record low interest rates that we've got at the moment, we've got the Bank of England consulting on negative interest rates, and we're in a crisis now, which is obviously a magnitude of order more than the financial crisis of about a year ago in 07-09. And generally speaking, the central banks of the world are resorting to quantitative easing, so effectively expanding the money supply to be able to sort of buy their way out of the crisis. And obviously the problem with that is that it debases or devalues your currency, which means then that suddenly if that starts to occur quite rapidly, and increasingly is the case that is happening on a global basis, people will then start to looking for more scarce assets. And traditionally they would look towards assets such as gold, etc. But Bitcoin does have this unique feature that its supply side is fixed and known and beyond the reach and influence of politicians and central banks, which I think is something that certainly makes it appealing.
You mentioned, Gavin, the Bank of England. The Bank of England governor has said that even though Bitcoin hit an all-time high this year, the Bank of England governor is saying it's unlikely to work as payment in the long term. And he also said that don't put money in you can't afford to lose. That's not exactly validation of cryptocurrency, is it?
It's not, no, but I think to some extent we need to be careful about what we're thinking here. So that kind of argument is true, but it's based really on capacity. So if you look at Bitcoin and similar decentralized currencies as they're known, Bitcoin in particular can process about 7 transactions per second. And that compares to something like Visa, which can do sort of 20 to 30,000 transactions per second. So it's quite true that, a vehicle or a currency such as Bitcoin certainly cannot replace our existing monetary systems at the moment, nor the payment systems either. However, if I was to take you back 100 years or so and show you the Wright brothers and their attempts at aviation and tell you that it was going to change the world and international travel, you wouldn't necessarily see what it could become. And I think the interesting thing with Bitcoin is that it's not just a proof of concept, it's a concept which has been working.
Dr. Salami, one of the key problems with cryptocurrencies is regarded as regulation, or rather the lack of regulation. How do you think we should be regulating cryptocurrencies?
Okay, so usually the rationale for regulation is, particularly in these types of assets, is primarily investor protection, market integrity, that is to have a transparent and fair market, and to ensure that these types of assets don't facilitate financial instability, i.e. the preservation of systemic risk. And the thing is, if we do not begin to, the way these assets are operating, they're operating pretty much as financial assets. And therefore, if we don't regulate them, what we're really putting ourselves out there for is that there will be risks to investors, there will be potential market manipulation happening through the lack of regulation of the space or in the space. There would also be a potential of financial instability, that risk that we're trying to avoid.
Gavin, isn't one problem possibly that the more regulation that you introduce, the more cryptocurrencies start to feel like more like central bank regulated currencies? In other words, could regulation kill the currencies?
In my view, probably not. And the reason for that is that a lot of these digital assets, or crypto assets as we might call them, such as Bitcoin, are largely beyond the reaches of regulation in terms of their substance. And the reason for that is that, Bitcoin isn't a listed company. It doesn't have a board of directors, doesn't have a governance structure. It doesn't have any tax domicile. It's not a physical or even normal organization as we would come to know it. So to actually regulate a lot of these assets is not necessarily impossible, but is certainly beyond the reach of our existing kind of structures in terms of how we operate in terms of regulation and law, which I'm sure Dr. Salami has more to say on than I. But I think the other thing that we almost need to bear in mind as well well with this is that there's really a three-way competition at the moment for the future of money. We've got decentralized currencies such as cryptocurrencies like Bitcoin, etc. We've also got central bank digital currencies, which is really the nation states recognizing this external threat and starting to come up with their own versions of these currencies to try and almost, rather than fighting and regulating and attempting to frustrate these technologies, why not introduce a more mainstream technology which is more conducive to your citizenship, and hopefully that will drive adoption and keep the threat of something like Bitcoin away. And then finally, we've got the idea of corporate currencies. So this would be the idea of people like Facebook and JP Morgan already either having launched or planning to launch their own currencies. So the future of money is certainly very exciting at the moment and is very much up for grabs in terms of what the future might hold.
And Gavin, where do you think the crypto or digital currencies are heading now in the medium to long term?
I think medium to long term, they're probably a good bet, in terms of their speculative ability. Dr. Salami was talking there about, the kind of utility that you get or don't get from some of these currencies. But, at the moment, it is starting to shake things up. If you're a Sri Lankan national working at the US and sending money back home, you may have expected to pay up to 20% in transaction fees and maybe spend 3 days waiting for that money to clear and settle. So although the currencies such as Bitcoin are highly volatile and can sometimes be expensive, to certain people in certain economies, it can actually be preferable to their current functional money.
Dr. Salami, a gentleman called Craig Wright, who's credited and who claims to have invented Bitcoin, says, I invented Bitcoin, now it's a Ponzi scheme. He says he was meant to be a successor to cash, not a tool of speculation. What do you say to that?
So investigations are underway by the New York Attorney General's office, sort of looking at the connections, for example, with Tether and Bitfinex, and how that sort of has or continues to impact on the price of Bitcoin. So there are quite a few issues around really what has, come out, if you like, of Bitcoin in itself. Now, I have to say that the technology around it, i.e. distributed ledger technology, the blockchain, is a good thing and isn't problematic. And so we're seeing some quite innovative ideas that's happening on the Ethereum network, for example, and seeing things like decentralized finance, which Gavin, was talking about, and the things around the alternative financial services being built on those types of platforms that really highlight the direction, if you like, of the future of finance. So there's some good things coming out from that have resulted, if you like, from the launch of Bitcoin. Bitcoin in itself, there are still issues that I feel would need to be addressed and looked at moving forwards.
And I think many would agree with you. Dr. Salami and Gavin Brown, thank you both for joining us on the agenda.
Thank you.
That brings us to the end of another edition of the Agenda podcast. Next week, I'll be asking, what is the future of work? Is working from home here to stay, or, as the head of Goldman Sachs put it, simply an aberration? Remember, you can subscribe to this podcast on iTunes, Stitcher and Spotify. You can also find us on CGTN Europe Facebook, Twitter, Instagram and YouTube. And we'd love it if you could leave us a rating and a review. Until next week, goodbye.
The most interesting questions.
Are there other living beings beyond Earth?
Will man or machine be in charge?
Great question.
Always have more than one answer.
Well, hold on, let me just draw up a list.
And always come from more than one person.
That's where the credibility lies.
The concept of having a machinery which is alive and evolving didn't wait for us.
The end of inequality of incomes and wealth around the world, can you imagine how difficult that is at the moment to achieve?
Every episode, Stephen Cole, Murray Beveridge, and some of the brightest minds out there shed light on the answers to some of the most intriguing questions.
There are two ways of looking at this.
Machines can't really discriminate between civilian and military targets.
The Answers Project.
Maybe we need to just look at this in a bit more detail.
Extraordinary claims require extraordinary evidence.
The Answers Project, a new podcast from CGTN Europe.